Well, we're very optimistic about young startups, and we're open for business. As you mentioned, we've invested in 15 seed and Series A companies since March 1st, and we're listening to about 500 new companies every month. And so there's a groundswell of innovation as people try to make sense of what the future might look like in a post-COVID world.
What sort of companies are you investing in?
You know, we seek to partner with daring founders who build legendary companies from idea to IPO and beyond. And so we're looking for that enduring piece. We can't invest in companies that are just momentarily taking advantage of trends. So two of the recent Series A investments, one is a company called Vise with two young founders that are upending the wealth management space, and another company called Moz, which is helping students with financial aid. And these companies we think will benefit from COVID, but they really are meant to be long-term investments. We typically would partner with companies for a decade or more.
Roelof, have you seen private market valuations track the direction of public market valuations? Did it provide a lot of opportunities, or given that some companies, of course, aren't publicly listed, have the premiums stayed pretty high?
You know, pricing in the early stage investment business is more of an art than a science, I've found. The later stage companies are the ones where we've seen activity slow down pretty significantly. And as you're seeing with the wild swings in the public stock market, people have a very hard time of forecasting the financials of these companies. For the ones that are benefiting from COVID, will it endure? For the ones that have suffered setbacks, how quickly will they recover? And so that area has slowed down. But in the seed and Series A stage, the very nascent company building, where companies are just trying to figure out product market fit and beginning to figure out go-to-market, they're not really that affected by COVID. And so there we find the activity has been very, very strong.
Just back to the black swan, though, message that you sent out in March, which I think resonated with a lot of people, especially because you guys did something similar back before the financial crisis. I mean, you told companies to look at doing more with less, potential layoffs, cash conservation. What have you seen across your portfolio companies in terms of how they're dealing with the economic fallout and what the expectation is of recovery?
I'd say by and large, our companies have weathered the storm. It's incredible to think that it was just 3 months ago when we issued that black swan memo, and some people were wondering why we were doing it. Unfortunately, many of our fears have turned out to be true. Some of the companies have benefited. Companies like Instacart and Robinhood, some of these portfolio companies have seen their businesses accelerate. And one of the things we've talked about is that COVID is accelerating the future that Silicon Valley has been building. Now, there's some companies that have had temporary setbacks, especially those that are exposed to travel or the events industry. But they took the advice, they've right-sized their cost structures, and all have shored up their balance sheets to make sure that they can survive and weather this storm.
I had a question, Roelof, about tech more broadly, not necessarily some of those smaller tech companies that we just showed that you guys are invested in. Do you fear, given the huge gains over the last decade, but also just over the last few months in big tech, that there's going to be a big regulatory pushback? And if so, which subsectors of the tech market are you most worried about?
That's an interesting question. I'd say in general, by nature, I'm an optimist because I work in venture capital, so I'm very optimistic about all the young companies that are able to move very nimbly in this period of uncertainty and change. The regulatory winds that were blowing pre-COVID, I feel like they're probably abating right now just because the tech industry has been so instrumental in helping the country cope with the impact of COVID. You know, one of our portfolio companies, Zoom, has obviously enabled so many schools and businesses continue to operate. And so technology has played a huge role in our ability to deal with COVID. If you imagine 10 years ago, if this had happened, if we didn't have the sort of broadband infrastructure and all these wonderful software applications we can use today, I think the economic impact would have been much more severe. And so to some extent, there's a balancing of appreciating all the benefits that come from the tech industry.
Roelof, Instacart, which is another one of your companies that you invested early in, today got a valuation of almost $14 billion, $13.7 billion, and I think another big fundraising round. How much of an anomaly is that because of just Instacart being in the right business here at the right time in terms of grocery delivery?
Well, there are a few of them. There's Instacart, there's DoorDash, there's Robinhood. There are a few of these companies of ours that have benefited from COVID. And as I mentioned earlier, we think of them as accelerating their future. One of our partners joked that for Instacart, Christmas came early, but it wasn't Christmas 2020, it was Christmas 2025. Clearly, the company was on a trend of enabling consumers to benefit from grocery delivery, but many people still weren't using this service, and COVID has exposed their capabilities to many more people that have been able to benefit from it. And so obviously growth has been very, very strong.
In terms of your point earlier that COVID has sped up the adoption of various things that Silicon Valley's been building for people for the future, are they going to be big cap beneficiaries of that, incumbent company beneficiaries, or do you think this is all a rush to private market companies like those that Sequoia has in its portfolio?
I think that many companies can benefit. Startups, because they can move so nimbly, can probably find little pockets of opportunity that are new. By definition, they move more quickly. So, Amazon obviously has a grocery delivery service themselves, but I think Instacart has out-executed them because that's the only thing they think about, the only thing they focus on every day when they wake up. But by the same token, cloud infrastructure has been a huge beneficiary of COVID, and people realizing that it's very difficult for them to continue to stand up their own enterprise infrastructure and data centers. And so Amazon maybe hasn't fared as well in the delivery space, but their cloud business, I think, is on a tear.
Roelof Botha, thank you very much for joining us with an update from Sequoia.
Thank you for having me on the show.